Hello and welcome to episode 38. This week we reveal who won the battle between the gaming companies Meta and Take-Two Interactive. We have a portfolio update and we battle two more stocks against each other with this week's theme of best robotics companies. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. I don't know if it's because we're investors that prefer the cold, hard logic of reality, but Meta's virtual reality sector wasn't enough to get it the win, and this week's winner, with 3 votes to none, was Take-Two Interactive.
3, 2, 1, go.
Previously, our portfolios had been in the red, the benchmark down 2.8% and the Battle Royale doing slightly better, down 1.6%. However, this week was much better by all three. The benchmark up 1.3%, the Battle Royale this time slightly behind, showing just a touch of green with 0.1. The biggest movers in our portfolios will be of no surprise to regular watchers. Tesla, ever volatile, back up another 10%. I am happier when it goes up though, of course. However, Black Rifle Coffee down another 10%. Having a quick look at the highest valued stocks in our portfolio, on the beach right at the top, Tesla, even with its 10% gain, still coming in at number 2, almost 50% up from when we bought it. A few nice movers in the green, but nothing too exciting. And then in the red, it starts to fall a little bit more heavily. Oxford Lane Capital, our big dividend payer, is down 13%. And Manpower Group, the recruiter, also falling 21%. The Sporting Goods, Dick's and B&M also down tremendously. Black Rifle Coffee, the worst performer, it's fallen 50%. We bought it for $23.30 and it is now worth £11. All in all, we now own 36 holdings, and amazingly this week, 18 are in the red, 18 are in the green. We're net neutral. Next up, taking a look at the money streaming in through the income generator in the form of dividends. It's up to £28.21 a year. That's up from £27.43 last week. That means that the next payment in June is going to be £9.92, and in September £6.11, leaving us a grand total of £16.03 to pay out at the next time of asking in September. We've now added £900 into each of our 3 portfolios, which is so exciting. And last week, things were looking okay. I would say the Battle Royale in the green, which is again, just so exciting. The benchmark down, however, with a total return of minus 2.2. This week, things are looking even better, with the Battle Royale up 2.3%, beating the benchmark, which is also in the green, up 0.4%. Even the income generator is up 1%. Overall, that leaves us with £2,706 and a return of 1.2%. Things are moving in the right direction.
3, 2, 1, fight.
Aside from investing, I love gadgets and technology. So I thought, why not combine the two and invest in robotics? Whether it's a robotic lawnmower, medical robots, or some magic robot folding your laundry for you, I think the only way is up for this sector. And if that's the case, the only question remains, which company should we invest in? Show me robot you got! First up, we have ABB, a Swiss industrial conglomerate. And when it's not industrially conglomerating, it has a department that specializes in robotic arms and controllers. Here's its lovely little greenish snowflake. Apparently it is 16.8% overvalued. However, because we believe the sector's going to grow, that's not necessarily a terrible thing. And although priced for growth with a PE of 25.9, it's not necessarily overly burdensome. The areas of focus for the future are robotics arms and controllers, which are used to automate various tasks in manufacturing all sorts of products, from cars to pharmaceuticals. So it straddles some other industries that are quite high profit as well. So that's a tempting little company. It pays a small little dividend, nothing too exciting to worry about, and it's got a relatively healthy history and balance sheet. Next up, we have Teradyne, which is an American company on the NASDAQ. And what do they do, you may ask? And that's a good question. They are a developer of industrial equipment which help automate repetitive tasks, specifically in the semiconductor industry, another high-growth area you'll have noticed. They test products to ensure that they work correctly, particularly the most repetitive and time-intensive tasks. The valuation on this company, as you'll just have seen, is that it's 11.1% undervalued, and its PE ratio is 23.1, so comfortable based on today's decision making. It's got a small dividend yield and does have a little bit of a buyback as well. Similarly, it's got a decent balance sheet, so nothing too much to be worried about. So it's quite tricky between the two. Let's see what you think. So there we have it. Which company do you think we should invest in? As usual, pop a thumbs up next to the company in the comment that you want us to invest in, and that'll be the one. But from my perspective, I think we should invest in... It looks like summer is here in a big way, so I hope you've had a fantastic weekend. Good luck investing in the markets, and thank you so much for watching.
Goodbye.